What's up, family? This is your boy Ivan Hall, the Credit King. Can you still get a car loan with bad credit? Bad credit can hurt you in a variety of ways, but not as much as you would believe. Many individuals believe that getting a vehicle loan with negative credit is impossible, but this is simply not true. If you have terrible credit, you can still receive a car loan, but you will most certainly pay extra for it. Even if you have bad credit, it may be worthwhile in some cases to take out a loan. In most cases, however, it is preferable to work on improving your credit before applying for a loan. This enables you to lock in reduced interest rates and terms before agreeing to the loan. Many people consider cars to be necessary expenditures. Without a car, it can be difficult or impossible to reach many areas of the country, and many people depend on their cars often to get to work or for other purposes. However, if you are thinking of taking out a loan to buy a new automobile while still trying to fix your credit, consider the additional costs of owning a car, such as fuel, insurance, upkeep. While the car loan will pay the initial cost of the vehicle, it will not cover the expenditures for the daily use of the vehicle. When attempting to rebuild your credit, you must ensure that these additional charges will not lead you to fall behind on loan payments or other bills you currently have. In many circumstances, it is preferable to allow yourself as much time as possible to improve your credit score before applying for a vehicle loan. Planning ahead of time will always provide you with a better starting point for applying for a loan, resulting in better conditions and a better total loan. Before applying for the loan, your priority should be to raise your credit score as much as possible. In addition to practicing good credit practices such as making on-time payments and working down existing obligations, you should personally review your credit reports. This might assist you in identifying any trends or erroneous information, such as unfavorable remarks or closed accounts that are still appearing on your report. The idea is to give yourself as much time as possible to get your credit score to 700. At 700, you are more likely to receive favorable loan conditions from a range of lenders. Overall, the higher your credit score, the more likely you will have a pleasant financing experience. While attempting to improve your credit, you should also be saving for a potential down payment. The logic is simple here. The bigger the down payment, the smaller the loan amount. This single recommendation, depending on your terms and interest rate, might have a significant influence on how much you pay in the end. Many lenders who provide car loans, like other loan kinds, will feature an easy option for you to pre-approve online. The pre-approval procedure is a straightforward method to check for expected loan conditions and shop around for the best offer. During the pre-approval process, the lender will most likely request your credit history, credit ratings, expenses, current earnings. Using this information, they can estimate the loan amount and interest rate you are eligible for. Make careful to compare all of your pre-approvals at the same time. FICO models recommend 45 days or fewer. In these models, all inquiries received during a 45-day period are treated as one inquiry, implying that you should only begin looking when you are ready to commit. This can save you a few points on your credit score, but it's more crucial for getting the best conditions on your next loan. It is still critical to shop around and compare terms. Begin by contacting your bank or other lenders with whom you have a solid working relationship. Then, look for other lenders who have appealing offers. Compare interest rates, term rates, and other offers to get the best bargain, and become acquainted with the average deal. This will assist you in selecting the finest option when the time comes. Car dealerships may even provide a loan to finance the vehicle. However, keep in mind that the terms of these loans may be worse than those of a recognizable financial institution. If you have bad credit, you can get a considerably worse bargain than if you had strong credit. If you took out a loan with bad credit and were charged a higher interest rate, this is not always the case. If your credit score has dramatically improved since taking out the loan, consider refinancing to achieve a lower interest rate. Refinancing necessitates the same amount of diligence in looking around for the best offer. Once you've found the finest offer, refinancing may relieve some of your load by requiring you to pay less on the total loan. While it is theoretically feasible to obtain a car with a personal loan, it is not recommended. It is typically far more difficult to obtain approval for a bigger loan that can cover the cost of an automobile. Furthermore, personal loans have higher interest rates than automotive loans. While obtaining a vehicle loan with negative credit is doable, it may not be in your best interests. Taking the effort to restore your credit and strive toward a better financial future will usually result in a much better starting place. This results in a better loan and, as a result, a better loan experience. Consider improving your credit score before applying for a car loan. For more credit tips, credit hacks, and credit repair secrets, subscribe to our YouTube channel or visit us online at thecreditking.com.